Hey guys, welcome back to another video. So in today's video I'm going to teach you that what is a liquidity strategy and the strategy which I really use, and this is the only strategy which I use, and this strategy represents the whole smart money concepts. So without wasting time, let's get started. So welcome back to my channel. So what is liquidity? Okay, because as my strategy name is liquidity strategy, so what's liquidity? Liquidity is a stop losses of lots of traders. Okay, so now there is every time somebody is buying or somebody is selling. Okay, and if somebody wants to win with a buy position, then somebody else will lose with a sell position. Okay, so that's how what's the liquidity? Liquidity is everywhere in the market. Okay, it's everywhere, and it represents the stop losses, buy orders, sell orders, buy limits and sell limits. Okay, all these creates a liquidity in the market, and the big traders, those who move the market, okay, those who manipulate the market, they need liquidity. So what does it mean? It means that they need stop losses. Okay, so when they'll need the stop losses, so they will look where the all the traders are putting their stop losses. Okay, and then they will do the opposite of it. So suppose, look into this example. Wait. So okay, let's see over here. So here we can see that from the Asian session in Nasdaq. Okay, and you can do it on any time frame. It's like you can do multi time frame analysis for a context. Okay, like 1 age time frame, you can think about your context in 1 age time frame, and then you can take trades in 5 minute time frame. But you can do this in a single time frame also, so you don't need any other time frame. You can do it on 5 minute, 15 minute, 1 age, or anything. Okay, so now if you look at over here, it was a clear trend line. Okay, it was a very good trend line over here, and then there was a trend line break and this was the origin of the trend line. So now lots of the traders, what they'll think that this line over here is what is support. Okay, this is a support zone, and now what they'll do, they'll try to buy it from here by marking a demand zone like this, and then they will buy over here, and their stop loss will be a little bit below of this structure like this somewhere. So now the market makers, they know that what are the psychology of the retail trader. Like they know everything about it, like they know what the people will do, and they just assume, okay, that people will put the stop losses over here, and they coded their algorithms in such a way that those algorithms can spot out this liquidity pools. Okay, so over here we know that people will buy from this demand zone, and their stop loss will be a little bit below of this structure, right over here. Okay, and now their stop loss will be hit over here. Okay, so now liquidity is in over here, and now there will be some more traders, those who trade breakout, they will take a sell over here. Okay, and their stop loss will be a little bit above, like 55 points like this. Their stop loss will be like this, and the target will be this low over here. Their stop losses will also get hit. Okay, and now what a smart money trader do, okay, he will look it as a liquidity pool over here. Okay, he will think this is a liquidity zone over here. So what he will do, he will just place his buy limits, like the banks or like the big institutions, like they just, whenever they see that it's doing a fake breakout, they will just start spamming the buy limits over here. Okay, because they have lots of money, they can do it. You just place a one single buy limit over here, and your stop loss can be a little bit like this. Okay, and now what you can do is you can target buy side liquidity. So in this scenario, where is the buy side liquidity? The buy side liquidity is right over here. Okay, so this will be the target, and it hits on the next day in London session, and after that it keeps on, like it rallies from here. Okay, but my point is that over here it's a sell side liquidity, right? This was the sell side liquidity. because there were two types of traders, those who traded in this, like two or three, many types of traders, but most prominently, like there were two or three types of traders. The traders, those who were trading the trend line, they thought like it's a trend line breakout, so what they did, they took a sell over here, okay, or they waited for the retracement of this trend line, okay. When they saw the retracement of this trend line, they took sell over here, okay. And another were this supply and demand players, okay, and break and retest. So this was the break and retest guys over here, okay. So they took a sell over here, but their stop loss also got hit. And there was this demand zone over here, so people took buy at the starting of this demand zone, and their stop loss will be a little bit below over here. But what the market did, it just came down and then it just rallies up and takes all the stop losses, okay. And there are some more traders, retail approach traders, like we are all retail traders, okay. But the difference is that there are some traders, those who think that these things work, okay. Like they think that the supply, demand and support and resistance works. Yes, it works, but what you have to do is you have to get a really good risk management, okay. And you have to play with your psychology, okay. And I'm not saying if you learn this strategy you will be a best trader in this world. Still, you will need to train your psychology, your trading psychology, which is the 90% or 80% of the game, okay. Your trading psychology decides that how good trader you will be. All right, so that's why this is a process, okay. I'm telling you the process, but the whole path, okay, the whole way you will have to take it, okay. You have to go through all of your journals, and you have to control on your thoughts and emotions, and you should be aware about the thoughts which you are thinking in your mind while trading or while you are in a trade, okay. And you should write it down, and you should be very careful and know about that what you are thinking while you are trading. Like that's really important. So this is a good strategy. The strategy which I'm teaching right now, this is the best strategy right now, okay. This is the best strategy, and this strategy does not die, okay. And this strategy is like from like so much, like big people, they do this. And why people do this strategy? Because if somebody wants to win in this market, somebody else will have to lose. So if big institution wants to win in this market, they need like 100,000 people to lose in the market, okay. So the 100,000 people will take a sell from this breakout. Like they will think like, oh, it's a good breakout, like we should take a sell over here, okay. Or the people will take buy over here, like and the big institution will screw both of them over here, and they will do consolidation. And the normal retail trader will get mad over here, and he will put big lots, and then they will do what they want to do in the market, okay. So like this how the market works. So the stop losses were taken over here. So just think about it. If a big institution wants to place a big lot size, like 1,000 lot size, or like 500,000, 10,000 lots, okay, over here. So there is no liquidity at that moment of like 1,000 lots or 2,000, 10,000 lots. So what they'll do, they will create a fake narrative. Like you can see this fake narrative, the market is crashing, okay. Like it's at its all-time high, and now market is about to crash. Something happened in somewhere in Europe or in Middle East, and market will start to fall from now. But no, okay, it will create a fake narrative for the retail traders, and then it will take all the stop losses which was below this low, this low, this low, this low, and this was the main low, this was the daily low right over here, and it took the stop losses of that also, okay. And now you can take and then what they will do when everybody is looking for sells, because everybody can see this move, right? And human brain is like wired in such a way that they just see a pattern, okay, and they will just react on that pattern. So suppose like they will just react, okay, they will not anticipate, they will react. So if they see a big move towards the upside, the human brain will think like, yo, it's going upside. And if they will see a big move towards the downside, they will react to it and they will take a sell, okay. But you have to not react in the market, you have to anticipate, you have to build your own strategy, okay. You have to build your own way to take the trade at that moment. So you know that there will be the stop losses below these structures. You can place your buy limit right over here, and your stop loss can be a little bit below right over here, and you can target this buy sell liquidity, all right. Or you can target anywhere like 1:2. This is what you can do over here. So this is how the market works, okay. And this does not happen like few days, like this happens every day. Like this was the rally day, so there was like a normal this imbalance fill over here, so you could have entered right over here. What was the time? Yeah, it was like 11. You could have entered right over here. But these type of days are the days when the big institutions enter in the market. Okay, so now we decided this one. Let's see another example. So here's another example. So now if you can see that there was this big rally right over here. Okay, and there was a big rally right over here, and then what happened, that market was doing this, like went up and then it started to fall, and then there was a big fall over here. So if normal trader, if he'll see that this type of big candles towards the downside, well, what he'll think, like what will come in his mind when he'll see this type of candles? He will think that market is about to fall, and what he'll do, he will take a sell. Okay, he can take a sell from this, okay, with break and retest thing, which is taught in every books and on every average YouTube videos. Okay, people see this, and people, that new beginner knows about this. Okay, and now market goes up, taps into it, and people will take sell over here, and their stop loss will be above of this structure. And some of the few traders, like those who are little bit intermediate traders, not advanced traders, what they'll do, they'll take a sell from this candle, and they'll think that this is a supply zone. Okay, and what happens after that, market goes and takes the stop losses of these traders also, like those who took the sell from the supply zone. Okay, and now what you can see is that there's another breakout. Okay, so now the breakout traders will come in, and what they'll see like it's a really good breakout, and now they'll take a buy from over here with the retest, and they'll think that market will create a new high. Okay, like the normal average guy, those who thinks higher highs and higher lows are the market, like those guys will take buy over here. Okay, and the stop loss will be a little bit below of this structural low or this structural low. Okay, and then after that what happens, market goes down and takes all the stop losses. Okay, so now this how market plays with the average new beginner and the people. Like still now I also get played sometimes because it's really tricky. Like, so what you have to do is, and now what the big institutions or the big traders, those who know about this thing, that liquidity hunting, stop loss hunting, they know about this. So what they'll do, they will just place, they will see that this is a really good, this is a really good supply zone, right? So this is a really good supply zone. So what he'll do, like what the big institution will do, he'll take a sell from a little bit above, like 5 points or 10 points, like from here, wait, like here's the 10-point mark. Okay, and this is the round psychological level also, 22,100. So he'll take a sell from here, and his stop loss will be somewhere around like 50, like this, or he can do 30, and he can target where's the sell side liquidity. Just take your time, just tell me, like in this whole scenario, where's the sell side? Like there was a buy side right over here, so now to find the sell side, where's the demand zone in this scenario? Over here, right? This is a demand zone for retail traders, right? There was a fluctuation from here also, if you can see. So now what they'll think like this is a supply zone. So now they'll take a buy over here, and we know that what market do, it goes and takes the stop losses. So your target will be this low of this structure. This will be your first take profit. Okay, and now you can make this easy 1:3, and look at the entry over here. Okay, you have to train your eyes to see these type of things happening in the market. Like you can see, like it was like from a pinpoint, it fell down from there and it went straight into the take profit. Like not straight, but it was like a little bit of consolidation, but it never went into too much drawdown, so like it just really fell down hard, right? So now let's see another example. There are lots of examples. It happens some days and it does not happen in some days. Like on this day there was nothing. Okay, there was nothing on this day. I think there was some news over here, but there was nothing. Like if market would have gone above of this structural high over here, I would have taken sell, but it created a liquidity, it didn't went up. So never mind, let's go down over here. Okay, now see over here, look at over here. A normal average trader, what he'll think that this candle is, what he'll think about it, he will think that this is a supply zone, right? He'll think that this is a really good supply zone, right? And what happens? Can you look at this wick over here? Small wick. Should zoom in a little bit. Here, you can see this, right? So what's above here? People started to take sells from this candle's low right over here. Like they started to take sells, and the stop loss was a little bit above of the structural high, right? So this what happens. It went up, took the stop losses, and then it started to fall, right? And now what a good trader, the trader who trades with a liquidity strategy, okay, the trader who knows about the liquidity, right, what he'll do, he'll wait for the price to go and take this high, right? When price will go and take this high, he can just place his sell limit over here, okay, or he can wait for the confirmation. Like there are some traders also think like we feel a little bit of anxiety while placing our sell limit over here. So what you can do is you can just wait for this confirmation, right? You can go in smaller time frames and you can look for some sort of fair value gap over here or something on smaller time frames, on 1 minute time frame, okay? And you can, from that confirmation, you can take the trade, okay? If you are like beginner in this liquidity strategy, you can do that, right? And then so now see over here, now what happens? Market goes, what's over here? What are these? These are this is a demand zone, right? Like this is a demand zone. So now you can see that market gave a little bit of reflection from it, went up, right? And then it started to fall down. And then what happens? Like people took a buy over here. People took a buy over here, and now what they're thinking, that market will go up and take this high, because they think like the market is creating some sort of market structure shift, so they'll take a buy. But what happens, like we have taken a sell from here, so what happens after that? Market went down and take these two lows, and after on the next day it goes down and take this low also, okay? And now let's go on another example. There was this example over here in London session, okay? In London session, you can see that price was creating a higher high and higher low, and in this, all of a sudden it created a higher high from nowhere. So this is not a higher high, okay? This is a liquidity grab. So what you'll do, you will take a sell from a little bit above of the structure, like right over here, and your stop loss will be a little bit above from here, and your first take profit will be this structural low, okay? And now you can go for 1:2 and 1:3. But what happens after that? Market just went straight up. So okay, so we don't know, because it was in too much sell side liquidity right over here, okay? That's why. And now if you look at over here closely in this example, what you can see the previous day's low of afternoon session, right? This was the previous day's afternoon session low. So what happens? Market went down, took this low from here, and now where's the buy side liquidity? The first buy side liquidity is these two relative equal highs over here, okay? These two highs, and another one is right over here, and the last one is here, okay, which is taken on this day. But on Monday it did as liquidity grab, sell side liquidity grab over here. And now you know that what you have to do in this scenario, you have to just place your buy limit right over here, or you can place your stop loss like this, and your target can be this, okay? So now this will be your strategy. And what you can do is, if you are not feeling well, like if you are not feeling good about the trade, so what you can do is you can wait for the confirmation in smaller time frames, like 1 minute time frame. I can guarantee you will get some sort of fair value gap entry right over here, right? And then you can take the trade right over here and you can target these highs. Okay, now let's see, like here's another example. Okay, now market was creating a lower low, lower high, lower low. This was a lower high, lower low, lower high, lower low. All of the sudden it created a higher high. All of a sudden it created a higher high. So now all the traders, what they'll think, like they'll think that this candle is a demand zone, right? This is a demand zone, and they can see some sort of rejection from this area, so they'll think like this is a very good demand zone. And now tell me where the stop losses will be. Yes, the stop losses will be below of this structure, right? So now the traders, those who know the liquidity strategy, they'll wait for the market to go down and take the stop losses which are below here, which are over here, right? Or they can just place their buy limit and they can place their stop loss like this, and they can just wait, let the market do its thing, right? Just wait for it. You can do these things, okay? And see, like there are some days will be like this when you will get no entry, and there will be some days like this where you will get entry, okay? So be careful. Like on this day there was no entry. Now I can say that like I could have taken entry from this and like, but no, okay? Like this was some sort of news, I would have not traded this thing. Like now let's see, on this day also there was no entry. On this day also, like this what can have, this what can also happen. That's why I say like put a big as stop loss, right? Place a big stop loss. So suppose like you got your sell over here and your stop loss was too tight, so your stop loss will get hit and then market will fall down. So with the liquidity strategy also you will make losses. So that's why give enough room for the market to breathe, right? And then just target for 1:2. Don't be greedy that I need 1:5 or 1:10. That's fairy tale. Like it happens only once in a year, right? You get 1:20 or 1:10. Like that happens only when you are too lucky, but it will not happen often, okay? It does not happen frequently. Like 1:2 can happen frequently, 1:1 can happen frequently, but not 1:10, because that thing is also a risk management, right? So I showed you so many examples. Like here's another example. It went down, created an order block. Like I think so, if you are older in my channel, if you've seen the last videos, like I created the last video 6 months before, like it's, yeah, like I was on a long leave, you can say. Like I was not feeling good for making YouTube videos, but I thought like let's make from this January. But yeah, so if you look into my older videos, okay, you can see that I thought that what's the order block, the candle which is responsible to take the stop losses is the order block. So over here price took the sell side liquidity. You could have placed your buy limit right over here, or you could have waited for the confirmation which this market, which this scenario gave beautifully. Like it went up, created a market structure shift, and then it came back to this candle right over here, sorry, and you can enter over here, okay? And you can target these highs. Oh, sorry, your target can be these highs, okay? There are lots of examples, okay? Like there will be some days like this you will not get no entry. It's okay when you will get no entry. It does not mean that you are a bad trader. It does not mean that you have to do, and like day trading does not mean that you have to trade every day. You are not a scalper, bro. Like if you are scalping, okay, then you can trade every day, right? But if you're not a scalper, you are a day trader. The trader, those who hold the trades for more than 4 hours, they are day traders, right? So why you should trade every day? Because you will not get every day, you will not get these type of setups every day, okay? It's like twice in a week, or 3 times or 2 times in a week. That's it. 2 or 3 times. If you look it over here also, so this was the Monday, no entry. Tuesday, no entry. What's this? Oh, sorry, this is Monday and this is Tuesday. Sorry, this is Monday, no entry. Tuesday there was an entry, but you could have taken a loss. On this day also there was no entry, okay? On this day there was a good entry on Friday. So now think about it. You took a 1 hour loss and you make 3 hour win over here. So you are on that day, on that week, you are like 2% up or 2 or 3% up on this type of day. Okay, and on next week also, Monday, there was no entry. On Tuesday, it was such a beautiful entry right over here. And now I don't think so I have to teach you, like I have to tell you that what I did over here. Okay, because you guys know, if you are still now, like if you're still on this video till here, so you know that what you would have done over here. Okay, you would have just placed your sell limit and your stop loss will be right over here, somewhere around over here, and your target can be these relative equal highs, sell side liquidity, baby. Like you can do that. And now let's see this Wednesday. And I took this trade yesterday. What are these? What is this candle? Just think about it. Like this is happening, and what's this candle? What's this candle all about? This candle is a demand zone. So what's below the demand zone? Sell side liquidity, right? So now what the price will do, it will go down. Took the sell side liquidity. Now you could have placed your buy limit right over here. Okay, and your stop loss like this, and you could have targeted this high, which it did. Okay, and now if you want a confirmation, you can go on 1 minute time frame. I should show you that also. There's an inversion fair value gap over here. Okay, so market went up, there was this gap, so it went down. Wait, hold on. So there was this gap. Should zoom in a little bit. I think so now you can see that there was this gap over here. It went up, then it came down to this gap, and there was this imbalance also over here, fair value gap. Just tapped into it, and now there was my entry. When I saw that, I entered in this, and then what happened? It kept on going up, and then it took this buy side liquidity. Okay, and now you can see another thing is, let's go on 5 minutes. Now you can see that, what's this? What is this candle all about? This candle is supply zone, right? So now you can see that market went up so close, and then it fell down to what? To in this imbalance, right? And now the normal retail trader, supply and demand trader, right? And I'm not saying like they don't make money. The person who have a really good psychology, a really good experience of 5 years of doing every day in the market, and if he has a really good trading psychology, who knows, he's making more money than me, right? But the all thing is about mindset. Like your mindset should be really good, and your psychology and your control on your emotions should be really good, and your risk management plays the very important role. Okay, like cutting down the risk when you're losing and increasing the risk when you're winning, and you have a certain ceiling, like 1% risk only, and when you're losing you can go down to the 0.5% or a half of a 0.5%. Okay, you can go till that. So like that's the good risk management which I use. I will make video on that one also, of about that risk management. Like that risk management helps me to not blow any account. I cannot blow any account. If I take a funded account, I will never blow it unless or until they have some certain time period, but I will never blow it. Why? If I am trading from, like, if I'm really, if I'm in a very bad losing streak, still I will not blow it. Why? Because I'm using a risk management of cutting down the risk into half when I'm losing. Okay, so that's how, if I lose 20 trades or 30 trades in a row, then also I will not blow the funded account. I will go like 3 or 5% or 6% in drawdown. So just think about it. So I will make a video about that also, but let's look at over here. So over here, what's this? Supply zone. People will take sell from the starting of the supply zone, and where will be the stop losses? The stop losses will be above of this high, right? So what happens? Went up, took that sell side and down. So it created a fake move, and now people reacted in these 3 candles. They thought like market is falling from this candle, this supply zone. Okay, like this is what they're thinking right now. And now what happens? It fell down, created a fake narrative that market is about to fall, and then once again it just goes back and stab into it. So I hope you guys understood this video. Okay, I hope you guys understood this strategy. This strategy is really simple. You have to just look for supply and demands, and what's above the supply, buy side liquidity. What's below the demand zone, sell side liquidity. Okay, so easy to find liquidity, right? And now, if you now you can do it like on with a higher time frame confluence. You can do that also, like with a higher time frame. You know that, like right over here, I think some market went down. Nah, it didn't went down, but it came till this gap, right? Fill this imbalance. Yes, it filled this imbalance over here. Okay, so like you can make a narrative over here like this of higher time frame. Okay, and then you can trade on 5-minute time frame. Like I made a video about that also, but the thing is that you should look for good setups only, and it will be in few days. Like it can be frequently 2 days, and like there will be like 3 days when there is no setup like this. Okay, and they will be set up on Friday. Who knows? So this does not mean that you have to trade on Tuesday only. No. Okay, and it was like 31st December, I guess. That's why like market was like this. But okay, all right. But see, this is what I'm trying to explain, that the buy side liquidity and the sell side liquidity is found with the supply zone and the demand zone. Like these are the two things. Okay, and now there are some more ways to find liquidity, like by using a trend line, by using not using a trend line. You can see that price is creating some sort of trend line, and then it goes above and breaks the trend line, and it's a fake breakout. And what's the reason behind the fake breakout? It means that price is taken the buy side liquidity or sell side liquidity. Fake breakout means that. Okay, so now I hope you guys understood that what's the liquidity strategy. So this strategy I use. Okay, so I hope you guys understood, and if you guys like this video, drop a like and share it with your friends, those who do trading, and let me know in the comment section that on what topic I should make another video. Okay, I will make a dedicated video on any topic which you will say or which you will comment, okay, below of this video. So yeah, like I will do frequently from now. I will make videos frequently from now, and yeah, let's see. So until next time, wish you good luck and be safe.